Yes, I would say basically what we see is a stabilization of the volumes, right? So this is what we call the challenging environment, is that we don't see clearly a recovery today. The good news is that the volumes are stabilized after the trough that we've seen in Q4 last year. And indeed, our cost-saving program is delivering fast, and this contributes to deliver solid results in Q2.
Tell me about soda ash. Every time I talk about soda ash, I have to remind myself what a stunningly important compound and component of industrial processes it is as well. Is soda ash stabilizing the way you hope the rest of the business is?
Well, indeed, soda ash is absolutely key. And just to give you an example, if you look at a window anywhere in the world, there is 20% chance that you will find Solvay soda ash inside, right? So what we see is that the market is still challenging. Volumes are stable. But as you say, I mean, it's such an important product that is driven by very important applications, such as glass, such as bicarbonate as well, so flue gas treatment, pharmaceutical applications, and so on, also lithium carbonate, also solar panel manufacturing, that we think in the mid to long term, the demand will recover. And that at some point, you know, the market will potentially become tight again.
Are you reliant on China's recovery? Is the sector reliant on China's recovery? I still see this 4.7% annualized figure, the latest number, and I have to blink sometimes because that is not what I'm hearing from CEOs around the world. Are we reliant on Asia and China to recover some form of mojo in order for your key markets to recover?
I would say not so much for us. I mean, we're very diversified geographically. China represents more or less 5% of our turnover. And just to mention soda ash that you were referring to, the Chinese market is quite isolated from the rest of the world. So we are not so much exposed to China, maybe not as much as some other players.
Yeah, just Philippe, good morning to you. I wanted to talk to you about costs then in this space. As inflation begins to moderate, then are you seeing an easing in pricing, meaning hopefully stronger margins?
Well, I think, we've been very much exposed to inflation in energy costs. This is gone. This is gone. So we've seen, by the way, our prices going down, but our margins remaining solid. So again, I mean, I think we are, and you can see that we've been improving our margins for the second quarter in row. So I think what we expect is more or less a stabilization of our margins in the future.
Yeah. At the same time, you've also had a few more outcomes when it comes to your cost-saving program. And just looking at your results, your first cost savings initiatives are already bearing fruit. 19 million euros achieved in Q1 of 2024. How much more to go?
So, yeah, you're right, Arbil. We've delivered 46 million euro at the end of Q2, so in H1 of this year, out of the 300 million euro that we committed to deliver on a full-year basis by 2028. We expect to deliver this year only 80 million euros. So indeed, it's going well. And in particular, what is delivering very well is our plan in the plants. And in particular, all the digitalization initiatives that we are rolling out in our plants.